is our Tuesday, 3 p.m. Webinar time. Today, I brought to you an interesting topic, investment laws. What to do with the investment laws. Let's get going with our prepared webinar. We always prepare that for you. And when we hear what you need, we turn that into an educational material like right now. So you hear from me and you can do your own research, then apply that to your 2025 tax return. All right, before we do that, we always let you know our website, communitycpa.com, and we have 5 function bars on the top of the website on board with us. That is a click where you can become our client without needing to call us. You can just click that button and register yourself in, create your own username password that you can remember, then upload your information. Now, we have someone watching your upload all the time, so we will contact you and get you onto our team, and we can service you from there. And the appointment button is where you can make appointment with us, so you can click that appointment and see all the people that is available to you. Of course, we have our client portal and the payroll portal. Those are for our client wanting to see all their businesses in one place, and that's what they have, and we created for our client. And with our firm, there's some highlights about our firm, but I want to focus on this YouTube channel. Just like right now, whatever I'm talking about, it is going to be deposited to the YouTube channel. And the YouTube channel is not new. We have been doing 4 videos a week. 4 a week since 2020, March 28. So it has been a long time. It become part of our lifestyle. So it is very natural for us to come at 3 p.m. and start telling you what you can do for your taxes or for your accounting and for your financial decisions or anything that related to money. And we will talk about right here. And you can search under this magnifying glasses to search for the video you want to learn, you want to hear. Subscribe to our channel will give you the notification of what we talk about in the afternoon. Of course, I added one slide here. This is Immigrant Entrepreneur Summit. Immigrant Entrepreneur Summit is a nonprofit organization, 501c3. And you can donate to the nonprofit. Then what we do with this nonprofit is to help immigrant entrepreneurs to learn the skills to do business in U.S. and to prosper in U.S., to create that economy where everyone is doing well. This is 18 years going. It's not a one new thing, and it's certainly not going to stop, even if the environment today is pretty hushed to the immigrant entrepreneurs, but there are still American immigrant entrepreneurs in this country. So we are celebrating their accomplishments. And join us on Saturday, November 15, and you can use this barcode to register. Registration $70, and the event is going from morning all the way to 4 p.m. And in between, there are breakfast, lunch, afternoon hors d'oeuvres. So it is enough to feed you. You don't have to pack your lunch to come over to this event. But I do invite you to come. No responsibility disclaimer. This is more for our content we are sharing with you, and you want to take that with grain and salt and don't just blindly believe internet information. You already, I'm so believing that you have already learned your lesson to believe what's on the internet, what's on the social media, right? There's a lot of content don't worth of your believing. And our channel, it is technical based. So what we give to you is what's our interpretation and our understanding. That could be wrong, and by accident is not because we want to be wrong. Maybe we just understand President Trump differently than what he's really intending to do, right? So with that said, you want to take responsibility on your own. But this one is about investment losses and what you do when you have investment loss. This seminar, we have done our own research, and here is the solution, is the platform we give you so you know how to treat it. So when your investment fails, what do I mean by that? You invested in a small business years ago, but it now closed, or closing, or worthless. There's no return, no dividends, and no buyers in sight, and you felt like your money went in is not going to come back. So the question you're facing, you're asking yourself, is my investment completely gone? Or you are asking yourself, can I recover some, right? So the good news is the IRS allows certain investment losses to be deducted from your income. So even when you lose money, you may still recover values through certain tax code. So today, we're focused on the Section 1244 that can turn a bad investment into tax benefit. Let me show you how. So not all the investment losses are deducted against your regular income, right? So here there's two. Basically, when you have an investment losses, you're either lost from these open market, which is the public company you bought on internet through certain platform, whether it's Robinhood or America Trade. All of these ones, they're platforms, they're brokerage firms, right? So you bought, you sold, and you have a loss. That's what we call the capital loss. And you bought that, you sold it, you lost it, you have capital loss. But there is also a kind of investment losses. It's not called capital losses. It is called ordinary losses. These losses don't have the limitation of $3,000. Remember, you can only deduct $3,000 on your 1040 when you have $300,000 losses with Ameritrade, but you can only deduct $3,000, right? You remember those scenarios, right? But the ordinary losses are not the same. They can offset any of your income, your W-2, your interest income, your capital gain, whatever there is, the ordinary losses will offset any type of income. So with that said, and I want to point out, when you have investment losses, very often your tax preparer do not make any effort to try to classify your losses, and they just close their eyes, do a capital loss, which you only can deduct $3,000. But in some cases, like IRS Section 1244, allow the qualified stock losses to be treated as an ordinary loss. Got it? So let me show you a table here. The type of losses, capital loss. Example, sale of public stock. Annual deduction limit, $3,000. To offset what? Can only offset capital gains and the limited regular income. Okay? But ordinary losses, like Section 1244, that is a small business stock loss. Annual deduction limit is $50,000. If you're married, it is $100,000. And it's offsetting any type of income. Hold on to that really tight. Okay, then you may be saying that, okay, good news, Ying. I do understand now. I can do the Section 1244 loss deduction, but what kind of investment would qualify for Section 1244? So IRS Section 1244 allows qualifying small business stock losses to be treated as ordinary losses. So what is a qualifying small business stock? So that is a key concept, right? So listen to me. That stock has to be from a U.S. corporation. That's number one. Number two, the asset limitation, it is under $50 million if it is before July 4th, 2025. Means that if the stock you purchased was before July 4th, 2025, the corporation that you have stock with, their asset cannot be over $50 million. But after July 4th, this is OBBBA, right? After July 4th, that went up to 75 million, which means that more business would qualify for Section 1244. This one, and then one more thing to make you qualify, the business must be 80% of the business asset be used in the activity conduct of a qualified trade or business. Certain businesses like financial service, law office, accounting office, that stock doesn't qualify. But anything else, if it is like you invest in equipment, you invested in construction company, those are the ones that would qualify. So it is big chance that you would qualify for Section 1244, and that would give you the whole deduction of what you needed. If you invested in $50,000 1244, you are single, and then this section comes around, you deduct it all, and you will get a lot of tax refund back. All right. So example. Let me give you an example. You invested in $40,000 in a small corporation, okay? And the business went under in 2025. With normal capital loss treatment, you would only be able to deduct $3,000 in 2025. You carry over $37,000, right? But with Section 1244, if your stock qualifies for that, you would deduct the entire $40,000 in 2025. So if your tax rate was 28%, you're getting $11,200 additional tax refund back in 2025. All right. So what are the other benefits? Okay, other than the money I'm getting back, and what other benefit you have? Other key advantage is timing. And you don't have to wait or carry the losses over multiple years, right? But of course, if your Section 1244 is really huge, then you file jointly, you only can deduct $100,000 one year. Next year, you deduct the other $100,000. So it is immediate result. You don't have to wait for so many years for $3,000 little chip off, right? So once the business is officially worthless or closed, you can claim the deduction in that tax year. You see how the word was used, the worthless or closed. So that means you don't have to wait for the business to close. If it is worthless, you already can deduct. That provides a faster relief for you, right? Section 1244 rewards investor who takes time to document their small business investment properly. If you maintain a good record and the business was structured correctly, and you can do this. So whether the business is structured correctly or not, you knew it when you got into the stockholder situation. You already know they are a U.S. corporation. And then if the business, if you can show you actually have the stock of that business now is worthless, that is already your backup for making such a claim, for making such a deduction. Common situation where Section 1244 applied. Section 1244 can apply when small business investment becomes worthless or is disposed of at a loss due to business closure and liquidation, worthless stock, sales of stock at loss, corporation dissolution or bankruptcy, abandonment of investment, failed startup, or a dormant corporation, like nobody does anything. The owner just don't say anything and nothing happens anymore. That is common situation why Section 1244 would show up on some people's tax return. What kind of document you would need to claim Section 1244? You want to have the proof of the stock purchase, right? You must have some kind of proof that you paid for it and you have the stock purchase. It's not like you need to submit that to IRS. No. What you need to do is just to have that proof you have paid it. This is your stock certificate, and the company is not doing anything. Not only something you really don't need to be too concerned with that because the IRS knows that before you do. because the company files tax return every year. So if they're dormant, they probably already closed and they're not filing anything. If they make money, it will show up on IRS's record. So you want to prove that this is worthless. Maybe it's an email from the board of director saying that the company no longer working, or anything that proves it is not really there anymore. Then you file your tax return. The form you use is Schedule D and the form 4797. So let me show you this table. It's useful. This one explains the timeline. So investment made in 2018. Okay, so you have your bank record, you have your stock certificate, right? Okay, business ceased operation in 2024. Then you got the email from the owner saying that no more business or whatever happened. Or you know that the tariff tax already killed all the businesses anyway. So you can make a clip of President Trump's good decision to kill every importing, exporting business in the country, and that's pretty effective. Actually, talking about being effective of destroying economy, we have a amazing example nowadays, and we can see how this whole tariff tax is making someone else great again. But for U.S., I'm not sure we are great again, and I think we're in jeopardy. But you know what I mean by just business failed. Then stock worthless, and this is when when you decide that stock is worthless. 2025, I'm going to file my reimbursement, my tax refund. And the dissolution papers, a lot of times the company will dissolve. The company itself will have dissolution papers on Secretary of State. You can actually go to Secretary of State to see the status of the company, or if you know the business owner of the company and you can talk to them to see where they are, have them send you an email to say that yes, the company is dormant and there is nothing to happen, right? And you can then claim your losses on 2025 tax return. Okay, how the deduction works on your tax return. So it reports on Form 4797, Part 2. And this is where then, the tax form itself will flow that for you. So you just need to know the Form 4797 need to be reported and claim it in the year that the stock become worthless. So 2025 might be the year. Maybe you wait until 2026 or 7 because you're going to make a lot more money during those years. Maybe just wait until that time to declare the worthless of your stock. All right. Now, the final thought from me. If you are holding on to an old stock from your neighbor's business venture, it is no longer valid, and you knew your neighbor would not be able to buy you back, would not be able to return the investment because it is just failed business. Claim a loss in 2025 or claim a loss in a year you make more money than 2025. Okay, use that loss to reduce your tax liability. Keep in mind that Section 1244, you want to leave a note on your tax document for 2025 and attach your stock certificate, attach the conclusion of worthless, and write a note for your tax preparer. Just simply says, please apply Section 1244 for my investment loss. So they don't accidentally give you only $3,000. They should give you all of it, or up to $50,000 if you are single, up to $100,000 if you are married, file jointly, and whatever left over would go to next year. All right? All right. If you have more questions for us, these are our professionals. We can provide answers to you. You look at our specialties in here and you can book any one of our time. And it is a paid consultation when you book. The fees will come out, but it is a place where we have never seen anyone who met with our folks will say, well, it's not worth it. Let's just get money back. If you do request that way, we give you the money back. But the reality is that we're so capable and you won't run into that situation. All right. My last slide. The final slide serves as a comprehensive contact point for community CPA, providing essential information for clients and potential clients. It emphasizes of our firm's commitment to accessibility with multiple ways to reach out to you, including emails and the phones and the regular office hours on Saturdays. The mention of our 6 days a week operation in here reinforces our dedication to client services, making it easy for a business to seek help. That is our whole reason to even exist in the market. So we welcome you to become our client. I'll see you again. Bye-bye.